In the next week or two, shortages are going to start to happen. The bottom line is it is the most important thing that's going on right now. This is a time more than ever to just try to take a step back and try to remain as calm and clear-headed about all of this as you can. Australia is tough too because they're so isolated and they're very import dependent. So they're extremely vulnerable to this. It's how an energy crisis can spiral into a food crisis pretty quickly. It's arriving now. Asia feels it first. North America and Australia are critically exposed. Hey everyone, happy Easter. Hope you're all having a great day with your friends and families and loved ones. I just got back from New York City where I had an absolutely fantastic week. So hopefully you guys have had a good week as well. Wasn't sure if I was going to get to this weekend or not, but got back and I felt like, you know what, there is stuff that's going on, obviously, and it's kind of an important time. And so I put together some stuff that I'm going to run through fairly quickly, but you won't be surprised at the topic because it seems like all we talk about these days is uh, the grand chessboard and Iran in particular. And I think every week for the last 4 weeks, the last month, all we've been talking about is Iran. And to be really honest, I'm kind of getting tired of talking about Iran. But the bottom line is it is the most important thing that's going on right now. And everything about Iran is not only dominating the headlines, but it's also ends up dominating the market. So it's just really impossible to get around it. I think when we first started off, we talked about the overall big strategy and the plan and the fact that there actually is a plan, even though many people think there's not a plan. And, some of the different moves that have been being made and what the consequences are. And what we're going to talk about today is some of the consequences that happen regardless of what happens from here, regardless of whether you think there is a plan, whether you think there isn't a plan, whether you think it's going well, whether you think it's going poorly. Regardless of that, there are already going to be some consequences, and that's what we're going to discuss. But I just want to remind everybody that this is a time more than ever to just try to take a step back and try to remain as calm and clear-headed about all of this as you can, because war and people dying and people's friends and family being put in harm's way and the ramifications of what's going on, it's very easy and obviously understandable when you do get emotional about it. And I get emotional about it too. But it's when you feel that coming on is when you have to try harder than ever to kind of keep your head. And so what I always try to do on here is I tell you what I think is going to happen. I tell you what I think is going to happen, whether I want it to happen or not. I can't guarantee that I'm going to be right. And when I get it wrong, I'll tell you I got it wrong. But this is what I think is going on now, and I think it's pretty important. And so that's what we're just going to kind of run through some of these things. Now, obviously, everybody's been talking about the Strait of Hormuz. 2 months ago, nobody could find it on a map, and now everybody is an expert on it. But the reason it matters is because it's a very narrow passage through which, it's a single choke point through which 25% of the world's traded energy passes. Like 21% of oil goes through there. 20 million barrels a day go through it, and over 20% of the global liquid natural gas goes through there. And the bottom line is everybody in the world needs energy to power their economies. So it's incredibly important, whether we want it to be or not. It just is. And energy is one of the most important, if not the most important, inputs to any economy. And here's the thing: is I've titled this "The Last Ships," and the reason is because when ships leave the Gulf and they go transit the Strait of Hormuz, it takes a long time to get to where they're going. And this whole affair started about a month ago, and now the last ships are going to be arriving in their ports to which they are headed. And yet there's a few exceptions here and there where some ships are still going, but by and large, the last ships are going to start arriving in Europe and Asia and North America, this week and over the next few weeks. And there's just no ships or very, very few ships behind them. It takes anywhere from 3 to 4 weeks to get from the Strait of Hormuz to Europe. takes anywhere from a week and a half to 3 weeks to get to Asia, and it takes, anywhere from 4 to 6 weeks to get to the United States. And so some of them are still in transit, some of them are arriving this weekend, but in the next week or two, shortages are going to start to happen. And this is kind of a given at this point. It doesn't really matter what happens from here. I mean, this is going to happen, and you can kind of see. This is the map. It just kind of shows you where everything, goes and when it's going to be arriving. And it started. The last ships have already started arriving in Asia, and the last ones are going to arrive in the next days. Same for Australia. Yeah, I think Europe over the next week to 10 days, the last ships arrive, and over the next few weeks, the last ships arrive in the United States. And, despite all the technological advances in the world, it just still takes a long time to ship stuff via boat. And that's where we're at. But what the things that are going to stop moving, or at least by and large stop moving, are obviously oil. Everybody knows that about that. Also, everybody knows about natural gas. But there's more things than that it's not going to transit anymore. And these, in many ways, are just as important, although they have a little bit different effect. And that is fertilizers. Like Qatar and South Africa or Saudi Arabia supply like 15% of global urea and ammonia. And without these fertilizers, then crops don't get fertilized, and then you end up having food prices rise. Petrochemicals, kind of the same thing. Industrial goods, steel, aluminum, comes out of the Gulf states. So manufacturing inputs, shortages follow. And container cargo, rerouting via the Cape of Good Hope adds another couple weeks, and fuel cost to it. So we're going to end up having a supply shock. Whether it ends up being as severe as what we had in COVID, that's yet to be determined. But there is going to be a supply shock. It's just a matter of how much and who it hits first. But if we look at it kind of region by region, Europe obviously has very high dependency, and they have limited alternatives because they're not self-sufficient. So like 25% of Europe's oil imports come from the Gulf, 20% of their liquid natural gas. Liquid natural gas comes from Qatar. Italy, Greece, and Spain are the most exposed. They're in Southern Europe, and they are the most dependent on Gulf oil. In 2 to 4 weeks, we're going to have fertilizer prices rising, and then that will cause food prices to rise by summer. And again, if you reroute, it adds a couple weeks, which and increased costs, which gets passed on to consumers. And the industrial supply chains end up getting hit as well, and that can then lead to further supply shocks. So Europe is not, again, a good place here. And like I said, this is going to happen. It's just a matter of how hard it hits. Asia, they're the most exposed region. 76% of all Hormuz oil goes to the Asian markets: China, Japan, India, South Korea. China imports about 40% of its crude via Hormuz. Japan and South Korea, they have zero domestic oil, so about 90% of their energy gets imported, and a lot of it comes from this region. India, over 60% comes from India, or comes from the Gulf, goes to India. And Japan and South Korea, they're going to face rationing pretty quickly. My son's over there right now, and God, I hope he gets home quick, because they're probably going to have to start, rationing flights and stuff. The good news is that they'll cut the short regional and intra-country flights first, and they'll keep the long haul going the longest, but they are going to have shortfalls. And they're, you're going to see in the next week, you're going to see political leaders all across the world start coming out and begging people to stay home, not to drive, to conserve energy, et cetera, et cetera. And Asia is probably going to get hit harder than just about anybody. And then let's see who else here. Australia is tough too, because they're so isolated and they're very import dependent. So they're extremely vulnerable to this. And, again, 27% of Australia's oil and refined fuel imports comes from the Middle East. It takes about 28 they have about 28 days of net oil reserves, and so it's amongst the lowest of the OECD. So it won't be long before they're going to have to ration. A lot of fertilizer gets imported largely from the Middle East, and that's going to end up hitting Australian farmers. Um, and their winter crop planting is literally in the next month or so. So if they don't get the energy and the diesel needed to run the machines that plant the crops, and then if they don't get the fertilizer, to help the crops grow, you're going to end up with shortfalls. And there's just really no alternatives. There is no overland supply routes to Australia because it's basically an island. So that Australia is going to get hit again. It's just a matter of how hard. North America, low direct exposure, but that doesn't mean that we are immune. We're still going to get hit. Oil prices, trade on the global market, and when prices go up in one place, they go up everywhere. U.S. imports around 10% or 10 million tons of potash and urea annually, and the Gulf supplies a big portion of this to U.S. farmers. Not to mention petrochemicals. But Canada, Mexico, everybody is exposed, and the lag effect is going to be a little different because it takes a longer time for those boats to get here. We won't start feeling the shortages as soon as the other places. But prices will spike as soon as they start spiking anywhere in the world. Now, this slide right here, and I'll go over this a little bit more later, but this is part of the reason why the Trump administration felt that they could go ahead and do this, because on a relative basis, the U.S. and North America is more insulated. And when you go into a war, it's a relative game. Now, I know people don't like this, but this is reality. And so this slide right here is part of the reason why they felt like they were able to do this. So what were to happen if this whole thing were to get solved right now? If for whatever reason the strait fully opens tomorrow, regardless of the reason, and everything goes back to normal. Well, even if that's the case, we're still going to have these supply shock. It's just a matter of whether the supply shock lasts for a few days or a few weeks. And it won't really matter for 4 to 6 weeks, because that's how long it's going to take those boats to get here, even if they started going full speed again. Because it takes anywhere from 10 to 45 days for the ships to reach their ports. Then you're also going to have congestion when all of them do start showing up again. And insurance and rerouting is going to raise costs, et cetera, et cetera. And then refineries, they hold about 7 to 15 days, a couple of weeks worth of crude stock, and they're going to feel it first. And then not only that, but this fertilizer planting window that I talked about earlier, that's important, because if you miss that 2 to 4 week window, you miss it. It's done. You don't get to put Mother Nature on hold. So this is why it's such a big deal, and the timing is so important right now. This is essentially how an energy crisis can become a food crisis. If the natural gas gets cut off, that's a big deal, because a lot of the fertilizers are made, or one of the inputs in them is natural gas. So you get no gas, you get no fertilizer. And then so when fertilizer production stops, global supply falls within a few weeks, and then the planting windows are missed. And when the planting windows are missed, you get delays of 2 or 3 weeks, 4 weeks, 5 weeks, 6 weeks, and all of a sudden your yield falls by anywhere from 20 to 50%. And maybe you don't even notice it right away, but 5, 6 months down the road, when food shortages start to hit because the crop yields were lower, then you get consumers get hit with higher prices. So and about 50% of global food and production depends on synthetic fertilizers, and that is derived from natural gas. So that's how an energy crisis can spiral into a food crisis pretty quickly. Let's see. So if we get into a situation where these crops are not planted, fuel shortages hit the machinery first, right? And then the planting windows close. And then when you get no new crops in the ground, and the existing food stocks start to deplete, again, that happens like in the next, month to 6 weeks. But where it really hits home is 6 to 9 months from now. that's when food prices begin to rise sharply, 20 to 40% increases in staples and grains. Severe shortfalls in Asia and the Middle East, especially for import dependent nations, can face food insecurity. And a year from now or a year over, you start to get the second and third order effects: social unrest, export bans, hoarding, price spikes, et cetera, et cetera, et cetera. So this is how it can start very small, but pyramid into something much bigger than initially thought. Um, and so that was scenario A. But let's say that's if crops don't even get planted, right? But let's say the crops do get planted, but just the yields are lower. Well, you still end up getting a lower yield loss, and without the fertilizer on it, you could have a 10-30% reduction in wheat. You could get a 5 to 25% loss in rice. Corn anywhere from 20 to 40%. Soybeans aren't quite as affected. But long story short, the net effect is you get 20% 20% average yield reduction across these different major crops. And all of a sudden you have millions of people that are facing food shortages. This has the potential. I mean, we'll have to wait and see. We don't know exactly, right? And I'm not trying to just scare everybody to death, but the bottom line is we're going to have some effects from this, regardless of what happens from here. So let's look at this again from a regional perspective. Anywhere from 6 to 12 months out. So for Asia, obviously, rice imports are a big deal, and if rice prices could easily jump 30 to 60%, especially for the import-dependent nations. Japan, South Korea, and the Philippines are the most exposed. China has a strategic grain reserve, but that only lasts 6 to 9 months. India faces a dual hit with both energy costs and fertilizer delay. In the Middle East, Egypt imports about 60% of its wheat. Sub-Saharan Africa is fertilizer dependent. Food imports bills rise 40 to 80% in the poorest nations, according to the World Bank. In Europe, things like bread and pasta and cooking oil prices can end up 20 or 30% higher. And again, Europe has a grain reserve, but it's I don't know, 3 months or something. And then you start getting livestock aren't the livestock herds start to diminish, and you get price spikes there. And in Europe, Eastern Europe is more exposed than Western Europe, but all of Europe is exposed. And then with North America and Australia, they are food exporters, so it's more secure. But you're still going to have grocery inflation from 10 to 20%, and you're going to have, like I said earlier, the Australian winter crops are at risks if these fertilizers don't come out. So again, none of this stuff maybe hits right away, and we won't really know for 6 to 9 months. But again, this has the potential to be very, very impactful. Like I said, there is going to be a supply shock. It's just a matter of how big. And what history kind of tells us when you get these food shocks. This happened in 2007 and 8, and again in 2010 and 11, where we got this shock triggered by energy and fertilizer disruptions, but that was much smaller than what's happening now. And when we saw that, we saw rice prices spike 180%, wheat prices went up 130%. A couple 100 million people were affected, and 48 countries, experienced food riots or political instability as a result. And today's situation is just much worse than that was. Again, Hormuz closure affects 20% of global oil, 20% of LNG, and 15% of fertilizer. So again, this ends up being a food story more than it does an energy story. And you can already, obviously, this is how prices are reacting. WTI is up a lot. Obviously, crude is up, although crude has pulled back a little bit. Nat gas in the U.S. has not really been affected yet. I think nat gas in Europe prices are going to go up a lot more than they will in the U.S. just because we produce so much of it. So this is actually a little bit of a blessing that the U.S. produces so much of natural gas, because that will help to a certain extent. Wheat prices have gone up a lot already. Same with corn have gone up. So we're not starting from a super low base. And if the prices or if the supply shocks do hit, we could see prices go a lot higher. The bottom line is the last ships are extremely important. This is not a crisis that's coming. It's arriving now. Asia feels it first. North America and Australia are critically exposed. North America is shielded to a certain extent, but by no means immune. And even if we reopen, in the next few weeks, we are still going to feel this. And so it's just not a great, it's not a great situation. But that's this is this is kind of, and I know some people are saying, well, so then why are they doing this? Why would they go after Iran? Why would they do this now if these are the consequences? Aren't they playing with people's lives? Short answer is yes, they're playing with people's lives. That's exactly what war is. War is literally playing with people's lives. And if you think they shouldn't do it, well, I tend to agree with you. But this is where we're at. This is the real world. This is the real politic of it all. And so but you're saying, well, what's the goal? The goal is if they can somehow pull this off, and the U.S. is more insulated than the rest of the world, then they can secure the energy flow of energy for the next 2, 3, 4, 5 decades and remain the global hegemon. Again, this is the Game of Thrones. This is what this is all about. And they also want to prevent, a competitor from having a nuclear bomb and being able to threaten us with it. So again, it's all fine to say that you don't like it and don't support it and that we shouldn't be doing it. I tend to agree with you on all of that. But this is where we're at. This is the real politic of it. And this is what's going to affect your portfolios. So try to keep your head. And I hope you have a great Easter with your family. And try not to think about these crazy markets and just go out and have some fun. All right. See you next week, guys. Bye. Hi, I'm Brent Johnson with Santiago Capital. 4 months ago, we published Empire by Code and made a controversial claim. The US dollar stablecoins aren't just financial innovation. They're weapons of monetary power capable of extending the American hegemony without firing a single shot. The response was pretty intense. Some thought it was thought-provoking, others thought it was too conspiratorial, some thought it was ridiculous. But we continue to stand by the call. And since then, we have continued watching and we have continued researching. Because the empire isn't debating whether or not to expand. It's already expanding, right now, in real time. In Empire by Code, we also showed you why stablecoins matter, how $200 billion in tokenized dollars are already bypassing banks, eroding sovereignty, and making dollar access virtually unstoppable. We made the case that this is America's next great power move and tool to use on the global stage. But we left one question unanswered. Who controls it? Because while the United States will wield stablecoins as a strategic weapon, the battles to determine who gets to wield that weapon and which factions get to deploy it and under what rules are playing out right now. And the battles are brutal. In short, welcome to the stablecoin wars. These are actual conflicts with trillion-dollar stakes being fought on multiple fronts. Private issuers versus banks, regulators in civil war over jurisdiction, big tech plotting a return, nations resisting dollarization while their citizens have already voted with their wallets. The weapon exists, and the empire will use it. But the fight over the factions of who controls it is vicious, and most people have no idea it's even happening at all. So I'll give you a quick look into what's going on. Issuers generate billions in profit while traditional financial institutions are scrambling to launch competing coins before they become irrelevant. The SEC, CFTC, and Federal Reserve are fighting over jurisdiction, which creates chaos, which will ultimately determine which institutions get blessed and which ones get banned. In the yield battle, issuers earn billions of investing reserves while paying nothing to customers. Who deserves that yield will determine who captures trillions in economic rents. And in the blockchain wars, Ethereum currently dominates stablecoin infrastructure, but Solana and Tron are fighting for the prize, which is to become essentially the settlement layer for the entire digital economy. And in emerging markets, countries like Venezuela, Argentina, Turkey, and Nigeria, citizens are abandoning their local currencies for US dollar stablecoins. Now, some countries will be able to manage this better than others, but others will collapse completely. And we also have stablecoins versus CBDCs. Central banks are building digital currencies to fight back, but markets have already chosen and have definitively chosen dollar stablecoins. Each of these battles shapes who holds power for the next century. This is much bigger than just stablecoins, and it's much bigger than just crypto. This is a battle for control of the base layer of global commerce. And when currency becomes software, whoever controls that infrastructure controls everything. Every transaction, every contract, every financial relationship. The winner writes the rules for how value moves for the next few generations. That's why the banks that ignored crypto are now scrambling. It's why China banned stablecoins while building the digital yuan. It's why these fights are so vicious. Because losing means irrelevance, while winning means power that exceeds Bretton Woods, the Eurodollar system, and the SWIFT network combined. But this time, it's encoded in software and distributed immediately on a global basis. As we said above, the stablecoin wars have already begun. The empire is expanding, but who controls it and holds the reins is still being decided in real time. We've mapped the battlefield, identified the players, analyzed what's at stake. The full paper we're putting out is called Stablecoin Wars, one battle after another. Be sure to read it, because the infrastructure being built today determines who holds power tomorrow. The question is whether or not people will understand what has happened before it's too late. And these battles will very much determine much of your financial future. Thanks for listening.